Ever wondered how some people seem to get rich quick in the stock market, only for others to lose everything? Sometimes it's not about smart investing, it's about a classic scam known as the pump and dump. It's a deceptive scheme that has trapped unsuspecting investors for decades, and understanding how it works is your best defense. Picture the chaotic energy of an old-school trading floor. Phones are ringing off the hook, tickers are scrolling by in a blur, and in the middle of it all stands a charismatic figure. This is our scammer, and they're about to set a trap. They don't go after big, well-known companies. Instead, they target what are known as penny stocks. These are stocks from very small, often obscure companies that trade for just a few cents or dollars per share. Because these companies are so small and their shares are so cheap, it doesn't take much money to buy up a huge portion of them. Our scammer quietly accumulates a massive number of these shares at a very low price, setting the stage for the first act of their deception. This initial quiet accumulation is the foundation upon which the entire scheme is built. The scammer now holds the key to artificially manipulating the stock's future. Now it's time for the pump. With a large position secured, the scammer's goal is to create a massive wave of artificial excitement and hype around this worthless stock. They launch a widespread promotional campaign, flooding the market with false and misleading information. Using everything from boiler room-style phone calls to modern-day social media posts, chat rooms, and spam emails, they spread tantalizing rumors. You'll hear phrases like, "This is the next big thing," or "guaranteed 1,000% returns," and "get in on the ground floor before it takes off." They might fabricate news about a revolutionary new product or a pending partnership with a major corporation. As this wave of hype spreads, unsuspecting investors, driven by the fear of missing out, FOMO, start buying the stock. This new demand, flooding into a stock with a limited supply of shares, has a dramatic effect. The stock price, which was flat for so long, begins to climb and then it skyrockets. This sharp upward trend on the price chart seems to validate the scammer's claims, drawing in even more buyers who believe they've discovered a golden opportunity. Just as the buying frenzy reaches its absolute peak, the scammer initiates the dump. While everyone else is clamoring to buy, the architect of the scheme does the exact opposite. They sell off their entire massive holding of the stock at its inflated peak price. Since they bought the shares when they were worth pennies and are now selling them for dollars, they walk away with an enormous profit. One simple animation can tell the whole story. The scammer, once standing with a modest pile of shares, is now surrounded by overflowing bags of money. They have successfully cashed out, converting the manufactured hype into real, tangible wealth, all at the expense of those they deceived. Their work is done, and they disappear from the scene as quietly as they entered, leaving a trail of financial destruction in their wake. What follows is the inevitable crash. With the scammer's massive sell-off and the end of the promotional campaign, there are no more buyers coming in to prop up the price. The hype evaporates instantly, and panic sets in. The investors who bought at the top suddenly realize they are holding shares in a company that has no real value. They scramble to sell, but there's no one to buy. The stock price plummets as quickly as it rose, often crashing back down to its original price or even lower, becoming virtually worthless. The chart shows a heart-stopping nosedive. The hopeful investors who dreamed of riches are left with nothing but empty wallets and a painful lesson. Their money has vanished, transferred directly into the pockets of the scammer. It's a brutal reminder that if a deal in the market seems too good to be true, it almost always is.